We're entering a period of macro volatility with a widening war in the Middle East and elections coming up in the US and in Canada. And many Canadian provinces stepped up borrowing during COVID, and a lot of that debt is maturing in 2025. So that's a lot for borrowers to navigate. Can you each talk a little bit about what you're looking out for in terms of fiscal and funding challenges next year? We'll start with you, Nicoleta.
Thank you for having us here today, and thank you to Bloomberg for organizing this conference and to National Bank for sponsoring. Thank you. Since the pandemic, we've been executing borrowing programs in an environment of heightened volatility. At that time, we've made the decision to increase our liquidity level. So we went from holding 3 months of cash on hand to 6 months of cash on hand. We've maintained that strategy, and we keep healthy liquidity levels. What that has allowed us to do is just provided us some flexibility in terms of access to the market. What we've seen when we increase the frequency in the domestic market is that it does have an impact on our spreads and our cost of borrowing. So having that flexibility and accessing the market when there is investor demand for our bonds does help with our keeping our spreads stable or maybe even improving, and that has benefited that. In terms of public debt costs, there's a cost associated with liquidity. But what we've seen in the last couple of years with the yield curve is that it has actually helped us mitigate those costs of higher stock of debt because of the positive of carry that we've been able to get on the higher liquidity levels. I think as we're starting to see a normalization of the yield curve, steeper yield curve, we need to try to balance the need for higher liquidity, which does help us manage our program in such an environment, and balance that with the higher cost of the public debt costs.
Are you?
Well, thank you. So maybe before I get started, we'll do a little bit of an economic backdrop on what's happened in Alberta. And we've just released our first quarter. We now are projecting a surplus of $2.9 billion. That's up from 500 million earlier. So we are seeing generally it is positive. Most of that is due to our increase in energy prices. Our forecast for the budget was 74, now it's 76.5. We've also seen a shrinking of the differential between the WCS and the WTI. Both of those things have added net revenue to us. What we are seeing, though, is there is some challenge that we see. One of it's being the immigration that's occurred, and we're seeing some challenges, some stretches in our programs as we go forward. We also see that next year as well. I think we're forecasting our employment to slightly uptick. I think goes from 6.5 to 7. But now getting back to the borrowing side. So on the borrowing program, as Nicoleta alluded to, I think we all went through this in COVID where it didn't matter what you did, you just had to get your money in, right? So it was more about that, and we'll deal with it later. Well, here we are 5 years later, right? And for us, our borrowing this year, we had projected borrowing of $19.8 billion, but of that 19.8, 11.6 of it was pre-funding for the 2025, because we had 3 months of intense borrowing that we had April, May, and June of 2025 of 11.6 billion, and we knew that we couldn't fund that all at once. So what we've done is we strategically have been doing that throughout this year. And what we've also created is a debt retirement account, which allows us to match the maturities. It's also been a win just because of the slope of the curve. So it's been a net positive for us. So we've been able to do that and still make sure that we have enough money to pay the debt down.
Do you foresee the same level of pre-funding for next year's deficit?
Not us for sure, because we were mostly front-loaded for this year. I think next year we're only forecasted at about $5 billion. So, yeah.
What about you, Nicoleta? Are there any macro challenges that can throw you off your borrowing program trajectory?
I mean, we're for the next 3 years, we're forecasting of our borrowing program to be in line with or at levels that we've seen in the past few years. So we're forecasting between $5.5 to $6.5 billion. Currently, this year, we're funding a $6.2 billion program. So it is pretty much in line with what we've seen. The program is driven by refinancing, as Kevin mentioned, and also cash requirements to fund the deficit and capital requirements. And the government is, it's a government that's been in power for 1 year. The focus really is on balancing the budget in the first term. So we'll see deficits decreasing. We're forecasting to come to balance in 27, 28. But what we've seen in this past year is on the expenditure side, there's pressures on from the healthcare side. So there's a focus on rebuilding Manitoba healthcare with the focus on retention, focus on collective bargaining agreements. And then we're also seeing pressures on the healthcare side from price and volumes on the pharmacare side. So if we continue to see these pressures in healthcare, that's going to have an impact on our borrowing program. And then on the capital side, we laid out a 5-year capital program in the last budget and focused strategically on key areas of healthcare, housing, and economic investments. There is a cap on debt finance borrowing for the next 5 years. That's $1.7 billion is what we're planning on debt financing. So if inflation once again becomes a concern, that could have an impact on expenditures related to the capital program and impact on our overall borrowing.
I see. Growing portions of your funding have come from overseas this year. Can you explain what's driving that and whether you expect that trend to continue?
So Manitoba has always looked for opportunities to issue in international markets. In past years, we've borrowed as much as 30% of our program in international markets. We do look at the U.S. market as one of our primary international markets, a strategic market for us. So we try to maintain presence by issuing once a year or once every 2 years. This year, we were able to issue a 10-year global debenture. We also have a European and Australian medium-term note programs. Those we've primarily issued private placements. Given the size of our borrowing program, we have not done benchmark aside from Australia, which we did this year. But I think this year with the higher borrowing programs, international borrowings more of a, look at it more strategically and look at it as broadening our investor base, which I think that has a long-term impact on our borrowing program. What we've also seen this year is that arbitrage on a number of currencies, international currencies that we traditionally borrow in, they were all working for us. They were all on side. So we were able to get funding done at levels competitive to the domestic market, provinces in general. For ourselves, we borrow international. Well, the levels are competitive, but I think provinces across the board saw that phenomenon. So it also helps with mitigating the cost of public debt costs when there is a larger borrowing program as well.
Yeah, I understand that's the same situation for Alberta too, that you've been raising more debt overseas.
Yeah, well, so we probably have the most volatile borrowing program of all the provinces. So for us, that really is the first thing that drives it. So what happens is, depending on the size, if it can get done if it can get done domestically, we look there, and we tend to stay with the benchmarks. If it is an elevated borrowing, then our first point of contact next would be the U.S. market. Then we look to the euro market after that, and then all the other kind of currencies fall in place. But as Nicoleta alluded to, this year, since I've started, this is the first year that I can think of where every currency, every tenor, is close to domestic funding level. So it's made it a lot easier to make those decisions. The other point is, as well, is just due to the size. You know, if you can do a large U.S. benchmark, that's the equivalent of 4 domestic deals. So it buys you time, you know, for your next deal. It buys you space as well. So those are all factors that we consider when we look at it.
How can you maintain a presence in some of these new overseas markets when your borrowing program is shrinking next year?
Well, the reality is it is going to depend on size. If we don't have the size, if it can get all funded domestically, then we would look that way. But it's going to be depending on, you know, if there's a potential increase, then we would look. And like I said, our first choice would always be the U.S. market, and then you go from there.
I see. Canadian pensions have been more active in the debt market, both in Canada and overseas. And that means collaboration, but also competition. And I'm wondering if you've had to negotiate to make space for one another when there's competing funding needs. You know, is the pie big enough for everyone?
Yeah, I think the first concern that we all had is there enough capacity in the domestic markets for the provinces, the pensions, and especially with increased borrowing programs, that was a concern. But we do, you know, there is collaboration. We do talk amongst each other, especially with the provinces aware of what's coming to the market, are able to time our issuance so that we're not all looking to issue at the same time. But I think I've been surprised by the domestic market to how resilient it is, and it's been able to handle the provincial borrowing programs, pensions. I mean, for ourselves, we're 80% funded for the year, so we've been able to manage our program. And I think, you know, on the international side, in terms of pensions, they've done a lot of work internationally. They've issued a lot internationally. And I think they've done a great job of just marketing the Canada brand. And I've been hearing a lot lately about Canada Inc. And I think for ourselves, we were in the Aussie market in July, able to issue a benchmark transaction. That was a first for us. We've issued private placements in that market before. And what we've seen is majority was Japanese investors that were participating in those private placements. With this transaction, we saw much broader investor demand. We've had the Australian domestic investors that participated, Middle Eastern investor, European. And I think the success of that transaction, the broader book that we able to see, in part that's thanks to the work that has been done internationally by the provinces, the pensions, and all of us working together and really promoting that brand.
So what I've seen is, what I think is really good about the Provi market in Canada is that we do have things like a large issuer protocol. What we do is informally we'll talk to each other to manage that traffic. So we do that domestically, and I think it's worked very well. What's happened now is now with the case of the offshore, you now have started to look at that. So I know, for me, I've done that where I'll reach out if I hear that potentially there's someone coming. I'll reach out and just to get a sense of where they are, because at the end of the day, there's really only probably 5 of us that are really issuing, and we've got 200 days, so we should be able to manage that activity. It's just a spirit to be able to do that. But I think so far we've done a pretty good job.
It's been collaborative. So ESG seems to be losing its luster for many investors, for some investors. But we're seeing some pension funds and provinces coming out with green bond frameworks. And I'm wondering, how does ESG fit into your funding plan? Do you have plans to develop such frameworks? And what do you see as the pitfalls of such programs? Or what are the aspects of ESG that most appeal to you?
So we've had many conversations internally with regards to a formal ESG framework, sustainable bond framework. I think it does require a whole of government approach. There's a lot of work that needs to be done on the reporting side to be done properly and timely basis. So it does require that full of government approach. I think from a borrowing perspective, our concerns as do we have large enough projects, large enough program to be able to issue off a framework on a regular basis to build a curve. So those are the discussions we're having. We also see benefits from having an ESG program, a framework, and that is that it provides investor diversification, broaden the investor base. It allows access to those investors that strictly buy label bonds, also access to those portfolio managers that manage more than one portfolio, and that leads to diversification for our conventional program. So we can see the benefits. There's also concerns there. But I think government by nature implement social programs, look at programs that deal with climate risk and reaching the goals of net zero by 2050. So there's work that is being done. The question is for ourselves is, does it require a formal ESG framework? Do we look at putting out a report on there that touches on the ESG and what is government doing from that perspective? Manitoba 2 weeks ago released the Affordable Energy Plan. While it's not a climate plan or a climate policy, it does work towards the goal of reaching near zero by 2050. And the energy plan, it's based on principle of affordability, Indigenous reconciliation, talks about energy efficiency, jobs, economic development, as well as just security and reliability of the electricity grid. So these are all, I think, components of an ESG framework.
How does it look to Alberta?
So, as Nicoleta alluded to, we still are evaluating and monitoring, but as of right now, best of my knowledge, we don't have a framework. So, and the other point that she had made as well is the management of second curves. Again, being an infrequent or volatile issuer just adds complexity to that whole side of it as well. So,
speaking of that, how do you manage the boom and bust cycles of commodities and energy? And we're looking like oil is not doing so hot.
That's a really good question. So what we do is we maintain benchmarks. That's always a priority. There are opportunities to do MTNs if your borrowing's elevated, but for the most part, it's always focusing on the domestic benchmarks, and then as we did this year, then we look to the offshore benchmarks. But it's always benchmarks. We find that's the best route.
Okay. Well, that's less of an issue for Manitoba. Less reliant on energy. I think that's all. Thank you both.
Thank you.
Please.